Zee Entertainment Enterprises Limited. TV broadcasting and software production.
Stock info. A win-win. Zee-Sony merger has a potential to increase shareholders' value and re-rate the stock. With 49 channels and 500 hours of content produced every week across 12 languages, Zee Entertainment Enterprises Limited, ZEL, is one of India's leading TV entertainment networks. ZEL's portfolio of offerings is well diversified with 6 Hindi general entertainment channels, 18 movie channels, a few niche channels, and 16 regional entertainment channels. ZEL also has a global portfolio of 35 channels broadcasting in 190 countries, largely to the South Asian diaspora as well as local audiences in a few nations. While the foreign company mostly uses the parent network's library, it also generates local content in select areas. ZEL is also into movies, Zee Studios, and music, Zee Music. Zee Studios has produced more than 25 films in 5 languages over the last 5 years, with a hit ratio that outperforms the industry. The company intends to increase the number of films released from the current 8 to 10 per year to 35 to 40 per year across 6 languages. Zee Studios launched Zeeplex, India's first multi-platform PPV service, in FY21, allowing viewers to see some of the most recent films from the comfort of their own homes via their DTH connection or on ZEE5. Continued. Zee Music, on the other hand, is India's fastest growing music label and the second most subscribed Indian music channel on YouTube. Source: Annual Report 2021. The label's library now includes over 7,500 tracks in 11 languages. In 2017, ZEL launched Zee Live, a live events platform featuring services in the music, comedy, entertainment, cuisine, education, and gaming sectors. In February 2018, ZEL introduced ZEE5, its over-the-top, OTT, service. ZEE5 has made significant inroads into numerous consumer segments over the course of its 3 years of existence, thanks to its consumer-centric approach to content development, which has enabled it to grow its national, regional, and hyperlocal reach. ZEE5 is the largest producer of original Indian language shows and movies. Since its inception, ZEE5 has created and released around 200 original series and movies in 6 languages. 75+ originals were released in FY21, spanning a variety of genres.
Consolidated financial statements. Investment rationale. A win-win. Zee-Sony merger has a potential to increase shareholders' value and re-rate the stock. On September 21, 2021, the board of ZEL has given in principle approval to merger with Sony Pictures Networks India. The merger is in accordance with ZEL's plan to become a leading media and entertainment company in South Asia, with stronger growth and profitability. ZEL and SPNI have entered a non-binding term sheet to combine both companies' linear networks, digital assets, production operations, and program libraries. The term sheet provides an exclusive period of 90 days during which ZEL and SPNI will conduct mutual diligence and finalize definitive agreements. The merged entity will be a publicly listed company in India.
Continued. The non-binding term sheet from SPNI for a potential merger as per the following terms. Indicative merger ratio of 47.07%/52.93%, Z/SPNI, post-capital infusion of $1.575 billion by SPNI. Majority of the board of directors of the merged entity will be nominated by Sony Group. Puneet Goenka would continue to be MD and CEO of the merged entity for initial 5 years. SPNI would transfer 2.1 ppts of its stake in MergeCo to Z's existing promoters towards non-compete fee. Thus, Puneet Goenka and family would own 4% stake in the MergeCo. Further, they can increase stake up to 20% per applicable law. SPNI's success across entertainment genres, including gaming and sports, combined with ZEEL's strong expertise in content creation and deep consumer connect established over the last 3 decades, will add significant value to the merged entity, thereby increasing shareholder value multifold.
Continued. We believe that the merger is nearing completion, and that the new entity would be India's largest media company, with leadership in nearly every genre and language in the country. The merged entity is expected to have 75 channels, 2 OTT platforms, and market share of 25%-30% in TV viewership. Spin's $1.575 billion capital injection will enable the merged firm to compete with global behemoths in OTT, as well as invest in premium content such as sports. The growing digital landscape has created new monetization prospects in sports. Well-established track record in media and entertainment industry. ZEEL is a media and entertainment powerhouse offering entertainment content to diverse audiences. With a presence in over 173 countries and a reach of more than 1.3 billion people around the globe, ZEEL is among the largest global content companies across genres, languages, and platforms. ZEEL is present across broadcasting, movies, music, digital, live entertainment, and theater businesses, both within India and overseas, with more than 260,000 hours of television content and houses the world's largest Hindi film library with rights to more than 4,800 movie titles across various languages. ZEEL has also produced several movies for theatrical release and is the fastest-growing music label in India. It has presence in the digital space with ZEE5 and has also ventured into live events. Continued. A diverse channel portfolio could increase viewership. 6 Hindi general entertainment stations, 18 movie channels, 9 in Hindi and 9 in regional languages, 7 specialist channels, and 16 regional general entertainment channels make up ZEEL's diverse portfolio. It has a large presence in general entertainment channels, and it is the market leader in Kannada, Marathi, and Bengali. Furthermore, with the opening of new channels, ZEEL has grown its influence in the movie genre and has risen to the top of the genre, with its network accounting for 25% of all television movie consumption in India. We anticipate a further gain in viewership share from 17.7% in Q2 FY22. Growth on viewership could improve advertisement revenue. Overall, spending on TV advertisement has grown at a CAGR of 14% in last decade till 2019, backed by higher number of channels, genre diversity, and higher interest in sports such as cricket, football, etc. Further, according to a report by advertising company, Dentsu, the Indian advertisement market will recover to pre-pandemic by 2022. Overall, ad spend in APAC is projected to grow by 8% to touch $229 billion in 2021. This growth is slightly slower when compared with the global ad spends. India is the 5th fastest growing ad market globally in 2021 after Canada, the US, Australia, and UK. The report highlighted that after a steep 13% decline in 2020, advertising spend in India is forecast to grow at 11% in 2021 to reach $9 billion. TV continues to be the most popular media in India, with a leading 40.9% share of spend that shows resilience despite the pandemic and a 7.7% growth compared to 2020 spending.
Continued. In Q2 FY22, ZEEL's advertisement revenue grew 20.1% YoY and 18.9% QoQ to 1,089.3 rupees crores. It witnessed an upsurge in viewership by 70 bps to 17.7%, mainly due to launch of more than 30 shows across India. 17.7% viewership, though, is lesser than 19% witnessed in Q2 FY21 due to subdued performance by a few general entertainment channels. The management of the company expects healthy growth in ad revenues in H2 FY22, which could surpass pre-COVID levels. Some reports suggests that shift in viewing from TV to OTT platforms could impact the TV ad spends. However, we believe TV advertisement continue to be preferred choice of advertisers, especially from FMCG industry, which is the one of the highest contributors in TV ad spending. On the other side, if we take into consideration lower TV ad spends, still the doors are open for ZEEL to monetize the ad spends via its OTT platform, ZEE5, ZAVOD, advertising video on demand. This model allows the subscribers or users to view the content for free. The platform earns through the ad revenue model, where it charges brands/companies for posting ads on the platform. As per the data available from the company's annual report 2021, the ad spends by advertisers could be around 9,100 rupees crores, and the advertiser base is expected to grow to 500,000 over next 3 years. So, there is headroom for the revenue to grow from these segments. Continued. ZEE5, gaining momentum backed by an extensive content catalog. In FY21, ZEE5 saw strong growth across all operating metrics on YoY basis. The monthly active users on the platform was at 72.6 million at FY21 exit, with an average watch time of 156 minutes per viewer per month. ZEE5 released 75 original shows and movies during the year and continued to be the biggest publisher of original digital content in India. In June 2021, ZEE5 was launched in the US, the biggest market for South Asian diaspora. Zee has been present in this market for over 2 decades, bringing the best of Indian entertainment content through its TV channels. With ZEE5, the company now look to offer audiences access to a much wider choice of TV and digital exclusive content. ZEE5's revenues were 130.5 rupees crore, up 17% from the previous quarter, due to robust content slate addition. During the quarter, ZEE5 published a total of 13 original programs and movies in various languages. In December, ZEE5 had a global daily active users of 9.3 million and a global MAU of 93.2 million, compared to 7.1 million and 80.2 million in Q1. The company's management stated that as part of its long-term growth strategy, it will increase investment across all segments. On linear channels, it expects 28 to 30 new series in Q3 FY22, and in OTT, new series is expected to be greater than in H1 FY22. The goal of the planned content investment is to increase viewership and reclaim market share in Hindi and regional markets. It also intends to grow movie production, with a robust slate of films in Hindi, Tamil, Telugu, Marathi, and Punjabi scheduled for release in H2 FY22. Continued. Indian OTT market is picking up the pace and broadcasters, including ZEEL, are investing heavily in making their own platforms. Some of the factors which are aiding the uptick in momentum of adoption of OTT in India are cheaper data, growing number of mobile subscribers, and growing penetration in rural areas. OTT platforms, which have strong and content to engage the audience for longer duration, have the upper hand to leverage the growing trend, and we believe ZEE5 is strongly placed in the market. Outlook and valuation. We believe that a merger with Sony will boost shareholders' value backed by Sony's success across entertainment genres, including gaming and sports, combined with ZEEL's strong expertise in content creation and deep consumer connect established over the last 3 decades. The potential merger will also result in India's largest broadcaster with a viewership share of 25%-30%. With ad spends on the rise and a much stronger and broader content portfolio, the merged entity is poised to gain a significant foothold and attract significant ad spend from industries due to its much broader reach.
Profit and loss statement. Balance sheet. Cash flow statement. Key ratios.
Finally, the expectation on ZEEL. It is not a recommendation.